Okay, hi everyone. Welcome to our weekly webinar about credit spreads. This is Greg Kilpack, and I'd like to wait just a minute to let some people to join the broadcast. But I've got some interesting information for you this week. Some trivia you probably didn't know about. A lot of things going on to cover, and so this is going to be a good show today. Just to do a sound check, if I could have some comments on to make sure that you can hear me, I would appreciate that. You should be able to hear me, but also see the screen with a picture of actress Michelle Williams, who I'm going to talk about today. So if you could leave a comment, make sure you can hear me, hear me okay, that would be great. Sound is good. Thank you, Michelle. Okay, it's a minute or two after. Let's wait a few more seconds. Good morning from Orlando. Excuse me. All right. Thanks for being here. We appreciate your being a part of this. Um, Michelle, where do you live, if you don't mind my asking? Trying to get a feel for where everybody is. We even have some international attendees on this. So I'm always interested in knowing where people are coming from. You know, the internet makes the world a small place, so everyone can be a part of this. Okay, well, let's go ahead and get started. And people can watch the review, the recording later if they want to. Maryland, oh, very cool, awesome. Okay, so today I want to talk about starting off actress Michelle Williams. Now, I'm a big fan of Michelle Williams. You may know her from movies and TV shows such as My Week with Marilyn or Oz the Great and Powerful was a cute show based on the Wizard of Oz environment. She won 2 Golden Globes. So, why do I like her? Is it because she's a talented actress, an award winning actress? No, that's not why. Is it because she's an attractive woman? Well, that's always nice, but no, that's also not the reason. I can hear you now wondering, why am I talking about an actress in a stock market show? Well, it turns out that she is an awesome trader, really awesome. When she was just 16 years old, she entered the Robbins Futures Trading Competition, which lasts for 1 year and trades the futures with real money. And with real money, she turned $10,000 into over $100,000 in a year. Wow. Now, I've been studying the stock market for 30 plus years. How in the world does a 16 or 17-year-old girl win a trading competition? Well, it turns out her father is a respected trader, Larry R. Williams. And I've read many of his books. I've read at least 3 of his books. He's an amazing guy. He's got profound knowledge that I've learned from about the stock market. One of those things I'm actually going to teach you today, I learned from Larry Williams. Okay. Larry uh, is the all time record holder for the Robbins Futures trading competition. Back in 1987, he turned in 1 year because of how wild the market was that year. He caught the swings just right when the market crashed, and he turned $10,000 into over $1.1 million in 1987. That's crazy. My gosh, that's a lot of money. So he's an amazing trader, and apparently he taught his daughter a few things enough for her to win the competition 10 years later in 1997, even though she was only in high school. And that's what she looked like back in high school, the picture that's shown here. That's amazing. And that just goes to show you something that I've said all along, that a little knowledge goes a long way in the stock market. And people can be taught this stuff. Okay. Boy, I would have liked to have learned everything that he taught her back in the day. And incidentally, she won that competition in 1997, and no one has beat her returns since then. So, as far as I know, these are the number one and number two record holders for this competition, which is held, I believe it's held every year. So, pretty amazing stuff. Okay. Let me look through here. Yeah, no one has beat her returns since she won the competition. Pretty amazing. Okay. So that's why I have a tremendous respect for Michelle Williams. And she said she's not into trading. She's busy with her life and with acting. So I don't think she's trading anymore. Too bad. Okay, moving on. Let's go to Evergrande for just a moment. Evergrande, of course, the problems are not going away anytime soon. And eventually this is going to blow up. The question is if it's going to affect us or not. Look at this warning that happened. This is from yesterday. So this was yesterday's news. Fed warns China's property problems could hurt the global markets and the United States. I've been telling that to you all along, right? Okay, and now you have it from someone with a little bit more famous than me, Chairman Jerome Powell. Let's go to the next slide here. Fed chair warns China's property problems could hurt the markets. Yes, and it talks about this. Okay, so you should be keeping an eye on that to see if it's going to affect us. But so far, like I've said, it's not affecting us yet because the market's been pretty much sitting on the highs lately. So we're okay for now, but we got to keep an eye on that. So this is an alert that I sent out yesterday on Snap. Now, Snap, this is a bullish chart right here. And I'm going to talk to you why this is a very bullish setup. Doesn't look bullish, does it? Well, it is, and I'm going to explain to you why that is. First off, a couple of weeks ago, back on October 22nd, actually after the close, the day before, I believe it was, Snap released awesome earnings. Let's go to that. Give my computer a minute to catch up here. Okay, on October 21st, a couple of weeks ago, Snap was expected to have earnings of 8 cents per share. They more than doubled that. And it's kind of interesting to see that it's, a lot better than expected, obviously. Normally, you would expect the stock to gap up on really good news, or at least hold its value. Why is it gapping down? That's kind of interesting, curious. Okay. 4 days later, 3 days after the gap down day, it made about the lowest, maybe slightly lower on that day, but about the lowest low that it was going to make. So you see what is a rounded bottom there. There have been no new lows from that day, just a few days after the gap. So the stock has had plenty of time to trend down from here, and it's not. In fact, it's popped up a little bit. So that's very curious. Those are two things that say bullish, not bearish. The third thing that says bullish is that day right there. It's starting to go up. Got a decent candle there on just slightly better than basically average volume. So that's clue number 3 that this is a bullish setup. Look at the long-term trend on this. Look at that. In the past 2 years, Snap is up 4-fold. If you go way back here to around 2019, it was sitting at $6 a share. That's a 10-bagger in 3 years, basically, 9-bagger. 9 times your money in 3 years. That, my friends, is how you make serious money in the stock market. Okay, so the long-term trend is up. The stock is up a couple days ago. And then look at yesterday and today, red candles. That's curious. That looks bearish, right? Well, it's not. Let me show you why. Go to the intraday chart. Give me a second for my computer. So remember, after the stock goes up, it gaps up a little bit and goes down. Now, what this is something I learned from Larry Williams. And this is how the stock, the floor traders and the professionals, how they manipulate the markets in a legal way. It's perfectly legal to do this. Here, they gapped it up a little bit because there was demand from the markets and they sold it off. And then that gives them time to buy at a little lower prices, knowing it's going to go up the rest of the day. And it did. After the 10 o'clock low, the market was up the rest of the entire day, up a little bit. Very curious. That's actually a market manipulation in a small way. Today, even more market manipulation. What did they do? They gapped it and pushed it way down at the open today. That appears very bearish. It turns out that it's easiest to manipulate the markets right at the opening price. What they do is before the market opens, they kind of jockey for position and they kind of show each other, their hand a little bit to try to show them where they're trying to push the stock. And they did that. This first candle shows intraday. This is like a 5-minute chart. That in the first 5 minutes, the first trade was up here around 54, and they pushed it all the way down to 53. So in the initial trades of the market, they pushed it down pretty hard. What has it done since then? It's only gone up since then. So basically, they might, in fact, we've got a volume. Let's look at the volume over here on this candle. The volume, if I can get it to stay there, is 600,000 shares on that first 5 minutes to push it down that far. And what are they going to do? They're going to buy this stock for the rest of the day and spend millions buying it. So there's a cost to push it down, and then it's going to go up pretty much for the rest of the day. So what looks bearish and what scared some traders out who are not in the knowledge is actually a bullish candle. It's actually showing bullishness that the stock is likely to go up from here, even though the stock price is down from yesterday. Now, if it trends down from here, that's different. Okay, but I would expect it in the coming several days to trend up. In fact, within a month or two, I would expect it to go up to $70, $75 a share. You can buy some cheap, slightly out of the money options 2 to 3 months out, and it's an all or nothing kind of thing. You could lose it all, or you could make a really good return on this. So I'm probably going to do a little bit of that just for fun. If any of you want to, feel like being a risk taker, want to spend 40, 50 bucks that you might lose or might make a big gain, I would love to have a volunteer to have someone else share their experience in a trade like this for buying options. Excuse me. So if you want to do that, leave a comment. This is one of those situations where buying an option might be a good choice. But yesterday we sold a put down around, what was it? Hold on, let me pull it up. Okay, we sold the snaps down below at 52.50, I believe it was. So as long as it doesn't go down there, we'll be just fine. Now, even though it's gone down a little bit, I would expect it to continue to rally up for the rest of the day. Let's look at the intraday. This is a 5-minute chart again. So this looks great. This actually looks very bullish, even though they're doing a great job of hiding what's really going on here. So this is just one trade that I'm showing you. What looks one way may not actually be that way. Okay. Moving on, unless you have any questions about this, I'm going to go ahead and move on. And this is also a good time for you to think of any stocks you want me to look at and talk about. Otherwise, I'm going to talk about the stocks that are on my watch list right now. Okay. One stock that's on my watch list is Disney. This is the intraday chart, so let's go back to the daily chart. So after the close today, Disney announces their earnings. Now, there's something that's very interesting about Disney. First off, it's down about 10 to 15% from the highs that it set back in the spring of this year. That's bearish considering the market is sitting at all-time highs. The other thing that you should know about Disney is that its PE ratio is currently at 287. That is super high if you didn't know. An appropriate PE ratio for the growth of Disney should be around 20 or 25, not 287. That tells me that this thing long-term is really overvalued. Now, I'm sure, first off, the whole market is pretty overvalued. Second off, Disney got a lot of hype from their streaming media like Disney Plus, and The Mandalorian was a great show on Disney Plus. But the truth is that streaming media doesn't add that much to the bottom line for Disney, because Disney's already a huge company. So what that tells me is that Disney is overvalued. So I probably want to wait for the earnings announcement. If you want to be really speculative, you might buy a put early, but they might gap it up and then sell it off. So anyway, long term at least, or medium term, I think Disney is going to be going down more. And so I'm probably going to be looking to sell short or to buy puts, or for the credit spreads to sell calls above where it currently is. But I'm not going to do anything until earnings are announced at the end of the day today. Okay, so that's what's going on with Walt Disney. Let's look at something else I'm looking at. Newell Brands stock I'm looking at. Okay, so here's another stock that made its highs back in the spring, back in May, and we're getting a pretty good bounce here. Now it's still going up, okay? I don't want to enter a short position right now, but I want to see if it's losing steam. Looks like it is. So when it starts to roll over, if it does, that's when I want to enter a short position or a bearish credit spread. Okay, but right now it's still going up. Okay, but notice that the long-term trend on this is down over the last several months. It's all down. Every time it bounces up for a couple of weeks, they push it down. Bounces up a little bit more, they push it down. There's a big push down, then it goes up, they push it down a little more. Every time it goes up a little bit and they push it down. At some point, they push it down really hard. You can always look at any 6-month chart and look at the biggest volume candles in the last 6 months. And you'll notice that the biggest volume candles are red, with the exception of that one. Big one there on that day, big one there, volume, looking at the bars down here, big volume down there. And so most of the volume is confirming the downtrend. Furthermore, look at the little tails or shadows, they call them, on top of the candle. What that means is intraday, the stock went up and they pushed it down. Towards the end of the day, they're selling it off. Now, that's kind of an important clue also. Doesn't mean that the uptrend is over yet, but it's saying that the sellers are starting to jump in on this at these prices. So this would be a good entry point for it to roll over and go back down. That's what I'm thinking. I want more confirmation before I actually enter the trade, though. Okay. The market looks like it might be helping out a little bit lately because it's down a little today. It was down a little bit yesterday. That's what I'm looking at, but I want to see a little more confirmation. Then I'll probably pull the trigger on this if it rolls over. If it trends up from here, I'll wait. So that's what I'm looking at. Let's look at Honeywell. So not quite as bearish for Honeywell. Honeywell will go up above the 50-day moving average. Long-term resistance is, let me pull it down a little bit for you there. So the all-time highs are up here around 235, 237, right? Up here. I'm not convinced it's going down from here, but it might. So I'm thinking about another bearish credit spread. What I like to do is sometimes I like to look at bearish stocks while the market is still going up because they show that they're bearish pretty early on. You can see stocks that are not going to new highs while the market is going up. So they show their hand when they're doing the opposite of what the market is doing. Normally, most stocks do the same thing as what the market is doing, more or less. So if a stock is trending in a way that the market is not, that's a sign. And I'm seeing that right now with Honeywell. Again, it's not the right time yet to pull the trigger, but that's what I'm looking at. Let's look at Procter & Gamble. Now, Procter & Gamble is sitting at the highs. Yes, it could go higher. Looks like it is today. Sitting very close to highs. So I don't want to place a trade on this yet. But you got to remember, Procter & Gamble is a huge company. This is like a 747 trying to fly to the moon. At some point, it's just not strong enough to do that. So I want to see this roll over too, and then I might do a bearish credit spread on this. Or if it goes back down to a support level down here around 138, then I'll probably take the opposite of that. I want to see it start to go up, and then I'll do a bullish credit spread. So all of these spreads, really basically entry and exits on trades are based on support, resistance, and trend. There are lots of fancy candlestick chart patterns that books you can buy, like Stephen Neeson's very elaborate candlestick patterns with all the fancy Japanese names like dojis. You don't have to dive into that. I prefer to keep it simple because most of what you need is right here on this chart: support, resistance, trend, and volume. If you're good at reading those, you're way ahead of most other traders. Okay, that's really all I've got on my watch list today. So does anybody have any stocks you want me to look at? Any questions, any comments, anything at all? If you have some stocks you want me to look at, then go ahead and put them in the comments so I can take a look. Otherwise, we'll end at the bottom of the hour. Let's look at a few more stocks, see what's going on. Tesla. This is the Tesla trade that the alert that I did. We sold puts down below 1,000 on this day. It almost touched it the next day, but it rallied up just like I thought it would. Yesterday, Elon Musk opened his mouth and talked about selling his stock, and so that's what drove that yesterday. But they're buying it up today, so that's what's going on. With these credit spreads, when you have the majority of your profit, then that's a good time to get out of the trade, because when you have more to lose than to gain, like let's say you have 80% of the max profit, I like to hold for a max profit if I can, but you're risking a lot if you hold on to any trade. Okay. So let me look at some of the comments we've got here. Greg, can you explain cups and handles? Sure. A cup and handle is basically where a stock goes up and hits basically the left-hand side of the cup. It goes down and goes up again to at least the previous level of the cup. So if the cup and handle pattern shows up here for Tesla, this would be the left-hand side of the cup. Then the stock goes down, reaches the bottom of the cup, and it goes back up again to previous level highs or higher. That's basically a cup and handle pattern. It might be happening here in Tesla. Wouldn't be surprised, but I don't want to bet on that right now. That's basically what cup and handle is. Some people trade off of that. I don't necessarily trade off of that or call it that, but I just go on support, resistance, and trend. Let's see, Michelle, any good books on credit spreads one can read? I don't know any books specifically about credit spreads, but Investopedia is a really good online resource for all things regarding the markets. Credit spreads, I'll have to look into it. Let me do that. I'll write that down for next week. See if there are any good books on credit spreads. There's always articles and YouTube videos and that, but you have to be careful who you can trust online, because I got to tell you, from all these people who sell strategies and sell information, I myself am always looking to improve and grow. So I've been watching lots of credit spread videos lately on YouTube, and some of them offer some good information, but also some of them only show you their good side. They don't show you the bad side of what they're telling you. They don't teach you the risk that's involved, because with credit spreads, if you let the risk go, ultimately your risk can be 3 or 4 times your reward. And so you don't want to let credit spreads turn into the max loss. That's why we cut our losses short. Okay. Frank says option spread trading by Russell Rose. I'll look into that. That looks interesting. I'll write that down. Yeah, I want to check it out. Option spread trading. Okay. I'm always interested in learning from somebody new. The thing is, you got to remember, I've been studying the stock market for 30 years. I've read hundreds of thousands of pages or dozens, hundreds of books about all things related to the stock market. A lot of these books are full of fluff. They don't teach you much that's valuable. One of the things that I have really enjoyed learning from Larry Williams, he's got great books, including one book that's pretty easy to read called The Right Stock at the Right Time, if you want to read that book. I mentioned a really good book, was it last week or the week before, that talks about manias and crashes. Very appropriate for the current market environment. So yeah, Frank, thank you for sharing that. I'll look into that. But really, that's all I've got for today. Let me just look at a couple more stocks. So this is your last chance to enter a stock if you want to look at it. I'll show you one stock I'm looking at. Trulieve Cannabis. Now, if you look at the long-term chart on Trulieve, I like Trulieve. I bought it at $10 a share, right about there, and I made 4 times my money on Trulieve last year. Sold it about 45 when it started to come back down earlier this year. I've been waiting for it to go back up. It looks like it may have hit a support level. I actually bought into it a little bit. You got to remember, this stock is growing really fast. It's highly profitable, and it's the number one, according to me, the number one cannabis stock in a fast-growing industry. This stock is going to probably do really well long-term unless the market crashes, but I'm going to wait until the stock starts to trend up before I load up any more than I did. I just entered a relatively small position. Long term, I think it's going to be great. If you got 20 years, This would be a great growth stock to buy. You have to remember something about me. I'm a growth stock guy. Over the last 20 years, I have done really well by buying stocks, and at least 5 or 6 times I have bought stocks that have at least tripled or quadrupled within 3 years. Okay. Average return in the stock market's about 9 or 10% per year before taxes. So you're making 3 or 4 times your money in a couple of years. That's awesome. At some point, Trulieve is going to do it again. Okay. BX. Let's look at BX. Oh, yeah, Blackstone. Yeah, Blackstone rules the world. It's going way up, and that would have been, of course, the right time, a little pullback. But I never want to buy a stock that's too far along in the trend, because unless you do long-term investing, which I'm not doing on this is a short-term trade. I don't want to enter this until you get another pullback. I want to look at Blackstone. Let's go to some of the financials to see what's going on with this stock. So I'm going to pull this up. Actually, there is one other thing I needed to talk about I didn't mention. PE ratio is 19 for Blackstone. Let's look at the financials real quick. Generally, sales are flat, but in the last 12 months, trailing 12 months there, it's 3 times normal. I don't know why that is. That's curious. And earnings are way up. I haven't done much research lately on this stock, so I'm not sure what's going on. But it certainly is on fire, and now you see why, because sales have tripled. Have to look into that. Now, there's something else I wanted to show you. Within the last 48 hours, the Fed chairman warned us the ailing Chinese real estate sector poses risks to the U.S. economy and the U.S. stock market. I've been telling that to you for a few weeks now. Now the Fed chairman is warning us. I don't see this on the front of CNBC, in the front of Yahoo Finance, in the front of all the MarketWatch.com, the front of all these financial news stories and their websites. It should be, okay, because this is a big deal. This almost looks like something where the Fed can, the chairman can say, well, I warned you about this, but no one's reporting it. This is a big deal. We do have to watch this. Okay. But no one wants to, spoil the party, right, when things are good. Greg, do you primarily follow the Dow industrial stocks for your credit spreads? So I like stocks that are not volatile, that are predictable. They don't have to be Dow stocks. You can, do a credit spread on any stock that offers stock options. But I like Dow stocks or big, heavy stocks found in the S&P 500 because they're predictable. They tend to gap less. I tend to be able to see what's going to happen with them better. The problem is that if they're too stable and predictable, you don't get very good money by doing a credit spread on them because everybody can tell the direction of the trend. So really, the people who are going to make money in the stock market, no matter if you're trading stocks, buying or selling options, is people who can catch the reversals just right. And that's actually what we're trying to do. And that's not an easy thing to do. So the way to set things up, let me go back to the charts here. Hold on just a second. We are setting things up so that we are catching reversals like we're trying to do right now with Snap, because that's where the money is. It's not easy to do, but that's where the money is. We get the biggest credit or the biggest income when the whole market can't tell that this is going up. Okay. There's no guarantee this will happen. So if this stock even goes down to support and starts to go below it, That's where I'm out because I was expecting it to trend up from here. So we won't get the max loss. We will get, let's say the credit is about $100. I'm trying to do a loss even less than what I was gaining. So if the credit is $100, I'd like to get out with a $50 loss or a $100 loss. If it goes down to where I don't want it to go, where I don't expect it to go. If it trends down below support, I know I'm wrong. I want to get out no matter what the price is. Okay, that's kind of the logic. But I still think it's going to trend up from here in spite of today's down day. We'll see. Frank, you're going to take the challenge. You're going to buy some snap calls. Okay, buy maybe a couple out of the money calls out a couple months, maybe 2-3 months. And you'll be able to not risk the whole amount that you buy, because if it starts to trend down, you get out with a small loss. But if it goes way up, you can make some good money from that. So I want you to email me with what you end up buying, and we'll talk about that in the coming weeks. Okay, so Frank, you're going to be a part of the show if you're okay with that. Okay, that's all I've got from now. Last chance for any comments or any other stocks to look at. I'll give you 30 seconds. You want to look at something? What strike and expiration on Snap? Snap is currently trading at 53.50. So I might do a 55 out 2 months if it doesn't cost you too much. I don't know if it does it. I think it's every dollar. You could even do a 54, 55, 56, something like that. You should be able to, at least 2 months though. You don't want the time decay to hit you, so that you'll have less of a loss if things go bad. Gives you more time to make money if things go right. So at least 2 months. Unless things go really bad and Snap trends down from here, you won't lose that much even if things don't work out. Okay. So it'll probably be a few $100s that you're risking on that. So it'll be exciting. We'll see how this turns out. All right. That's all I've got for today. So everybody, thank you for being here. You're always welcome to email me with questions. Some of you do, and I'm happy to respond. I like to help people. I wanted so badly 20 years ago for someone like me to help me. But, I didn't have that, so I had to figure it out on my own, and it took me years to do it. Now that I'm there, I'm trying to give back, and I want to help you make money. So that's what I'm here for. So go ahead and email me. I'm at Greg with 2 G's at thetradersplan.com, or just options at thetradersplan.com. Both of those come to me. Okay. So everyone, thank you for being here. Thanks, Neil. You're going to do the challenge as well. Okay. Yeah. Email me. Let me know what you buy, and we'll follow it, and we'll cover it in the coming weeks, and we'll see if my analysis of Snap works out. There's never, of course, a guarantee of the future, but this might just work out, might surprise you. All right. So everyone, have a great week, and good luck in your trading. Okay. Thanks for being here.